blood in the vaults. In the last 24 hours alone, 15% of silver has vanished from exchange vaults. While prices were falling, while headlines screamed panic, physical silver was quietly being pulled out of the system at a pace we almost never see. This is one of those moments where if you only watch the price chart, you miss the story completely because the real action isn't happening on the screen, it's happening inside the vaults. Right now, as I'm recording this, silver prices look weak on the surface. But underneath that surface, something very different is happening. And that disconnect is exactly what we focus on here at Past and Profit. This channel is about understanding what the numbers are actually telling us. Before we go deeper, quick note, especially for new viewers, if you find this kind of real-time data-driven breakdown useful, take a second to hit like and subscribe. It helps the channel more than you might think, and it makes sure you don't miss what's coming next. Now let's slow this down and walk through what just happened. In a single day, silver inventories inside major exchange-linked vaults dropped by roughly 15%. That kind of drawdown is extreme under any circumstances. But what makes it truly unusual is the timing. Normally, when prices fall hard, physical metal flows back into vaults. Investors sell, metal gets redeposited, inventories stabilize or even rise. That's the textbook behavior. That is not bearish because they're trained to think price equals demand. But price in today's silver market is largely a paper signal. Futures, options, swaps, ETFs, all trading claims on silver rather than silver itself. Physical demand doesn't always show up in price immediately, as metal quietly leaving the system while the paper market screams the opposite message. Here's why this matters. They are the backbone of confidence in the paper market. Futures contracts only work because there is an assumption, an understanding, that if enough people demand delivery, the metal exists. Especially during price weakness, it tells you that real buyers see value, not fear. They're using lower prices as an opportunity to remove supply from the system. At Past and Profit, we always say watch the metal, not just the candles. Candles show sentiment. And right now, reality is screaming that physical silver is leaving at an accelerating pace. Let's connect this to the broader picture. Over the past several months, silver inventories, but this latest drop is different. A 15% decline in one day is not retail coin buyers. That's not someone grabbing it or entities that understand the importance of securing supply ahead of potential disruption. At the same time, futures open interest remains extremely high relative to what's actually sitting in registered vaults. In simple terms, there are far more paper promises outstanding than there is immediately available silver to deliver. That imbalance can exist for a while, but it becomes dangerous when physical demand increases instead of backing off, and that's exactly what we're seeing now. Another important piece of this puzzle is margin pressure. Exchanges have been raising margin requirements even as prices fall. That might sound technical, but the message is simple. Margin hikes are not about protecting you. When volatility increases and positioning becomes risky, they don't do this because they feel comfortable. They do it because they feel exposed. You can force liquidations. What you can't do is margin call physical scarcity. If someone takes delivery and removes metal from the vault, that silver is gone. No amount of paper pressure brings it back. This is why silver often gets hit harder than gold in moments like this. Silver is thinner. It doesn't take much physical demand to strain the system. And when stress shows up, it shows up here first. Zoom out for a moment and look at what else is happening. Stocks have been under pressure. Crypto markets have experienced heavy liquidations. When everything sells together, that's not fundamentals collapsing overnight. That's leverage being unwound. It pushes prices below levels justified by supply and demand. They don't chase green candles. We're also seeing clear signs of this behavior globally. Reports of increased physical buying in Asia. Queues forming even as prices fall. ETFs seeing massive trading volumes, not because everyone suddenly hates silver, but because positions are being violently adjusted. High volume during declines often signals capitulation, not the end of the story. Another detail that matters here is sentiment. Just a few weeks ago, silver traded around similar price levels with optimism everywhere. Momentum indicators were stretched. Today, at comparable prices, sentiment is completely different. Fear dominates. Markets don't reward emotion. Now, it's important to be honest about risk. Further downside is possible, especially if broader deleveraging continues. As long as risk assets remain under pressure, silver can remain volatile. Timing a bottom is never about hope, and we're not there yet. Physical silver is leaving the system rapidly. Paper prices are being forced lower through financial pressure, not collapsing demand. Either physical demand slows dramatically, or the paper market is forced to adjust. Rule changes, and all of them reward people who understand the difference between paper signals and physical reality. This is why we frame everything here at Past and Profit around time horizon. Traders care about the next candle. Stackers care about ounces. Know why you're here, and don't let short-term noise push you into decisions that don't match your strategy. As we move closer to upcoming delivery periods, the math becomes tighter. If even a modest percentage of outstanding contracts stand for delivery, the strain increases. And when vaults are already losing metal at this pace, there's less margin for error. So they break when stress quietly builds beneath the surface. If demand is weak, who is taking the metal? If this breakdown helped you see the bigger picture, drop a comment and let me know what you think is more powerful right now, paper pressure or physical demand. Share this video with someone who only watches price charts, because this is one of those moments where understanding the mechanics gives you an edge. And if you haven't already, make sure you're subscribed, because the next few weeks in silver are likely to be anything but boring. It's about evidence. Whether the market listens now or later is the only question left.